Hello and a very welcome to AE Accounting Tutorials. Wait, go nowhere. There are two accounting terms that normally confuses students, and these accounting terms are credit note and debit note. So I want to take you through the basic concept of these two terms, their accounting entries, that is their double entry, and how they are recorded in the control account. So the two terms I just talked about is credit note and debit note. So credit note and two debit notes. Good. These two terms arises as a result of a term called returns. So we have returns, and these returns are classified into two. So we have sales returns and we have what we call purchases returns. So these are the two returns that we have. Sales return is also known as return inwards, and purchases returns is also known as return outwards. So when we talk of sales return occurs when customers or debtors return goods to businesses because of the goods being faulty or damaged. Okay, so sales return is in relation to what? Customers or debtors. So I will say debtors, or what we call customers. Good. So purchases return occurs when businesses return goods to their suppliers or creditors as a result of the goods being damaged or faulty or did not meet their request. Good. So this, because they also return the goods to their suppliers or creditors, it is in relation to creditors. So I will say creditors or suppliers. Good. And listen, because the customers return to a business or a firm, and the firm also returns to a creditor or supplier, I'll put an intermediary at the middle called business or firms. Business or firm. Is that okay? Good. So what we are saying is that for sales returned, it is the customers that return to business. But for purchases returned, it is the business that returns to their suppliers or creditors. So in the book of the business, the customer is a debtor to this business. So we say that we have debtors or the customer's account in the book of the business. To the customer or to the debtor, the business is a creditor. Okay, because the customer bought the goods from the firm. So you have a creditor, you have a creditor's account in the perspective of the customer. Good. The same way, because the business made purchases from the supplier and then later returned the goods to the supplier, in the book of the business, the supplier is a creditor. Do you understand? Good. To the supplier or the creditor, the business is a debtor to him or her. So we write here debtor. That is in the perspective of the supplier. Good. Now I want to take you through how debit notes and credit notes are entered in both debtors and creditors accounts, and probably how they are entered in the general control account. That is the sales ledger control account and the purchases ledger control account. So how these two terms are entered. So listen and listen good. So when customers returned goods to the business because of several reasons or a reason, then the customer will send a note to the business, and that note is what we call a debit note, telling the business or the firm that his account with the debtor has been debited. So the firm will receive that note called a debit note received. So we will have what we call debit note received, debit note received by the firm. So it is the debtor or the customer that will send these documents to the firm that his account has been debited, because creditors increases at the credit side. So his account has been debited to reduce the indebtedness. So in that circumstances, the firm will receive what we call debit note received. So debit note received are found at the debit side of creditor's account. Good. So all these are accounts. We put it in that order. On the other hand, the customer may not send a note, but when the goods reaches the premises of the firm may rather send a note to the customer or the debtor. The document that or the note that the firm will send is what we call credit note issued. The reason why the firm will send a credit note issued is that for the business, the customer is a debtor in his book. So the firm will send a credit note indicating that his account has been credited to reduce the indebtedness, because debtors increase at the debit side. So the firm will send what we call credit note. So we call that credit note issued by the firm. The first one is debit note received by the firm. Good. On the other hand, let's move to the purchases return. So with the purchases return, we are saying that in the book of the firm, the supplier is a creditor, but in the perspective of the supplier, the firm is a debtor. So when the firm returns goods to the supplier, okay, the firm will attach a note or a document. That document is what we call a debit note. A debit note in a sense that the supplier, who is a creditor in the book of the firm, has a natural credit balance. So the firm will send a debit note to the supplier indicating that his account with him has been what? Debited, to reduce the indebtedness. In this case, the firm will send a document called debit note. Debit note issued to the supplier. Is that okay? But in other circumstances, the firm may not send a document or attach a document, but when the supplier receives the returns, the supplier will rather send a note or a document to the firm, and that note is what we call a credit note. So we call it a credit note because the firm is a debtor in the book or in the perspective of the supplier. So you will send a credit note because the debtor has a natural balance indicating that his account has been reduced in respect of what the product returned. So we will send what we call a credit note. A credit note. The credit note will be sent to the firm. So the firm will receive what we call a credit note. So credit note received. So in simple terms, we will say that a credit note is a document or a note sent to a customer or a debtor by a creditor or a supplier, indicating that the debtor's account has been credited in respect of the goods returned. So with regards to the debit note, in simple terms, we will say that it is a document sent to a creditor or a supplier by a debtor or a customer, indicating that the supplier's account has been debited to reduce the indebtedness in respect of the goods returned. So in summary, what I want you to understand is that a debit note received will be recorded at the debit side of the creditor's account in the perspective of the customer. The credit note issued will also be recorded at the debit side. Is that okay? And in the debtor's account, it will be recorded at the credit side, that is debit note received, and debit note issued will also be recorded. When we move to purchases returned, with the debit note issued, it will be recorded at the debit side of creditor's account in the book of the business. Credit note received will also be recorded over there. in the book of the supplier, the debit note issued will be recorded at the credit side, and a credit note received will also be recorded at the credit side. So when we come to the sales ledger control account and the purchases ledger control account, this is what I'm saying. The sales ledger control account, it is the total debtors control account. So it functions as the debtors account over here. Total debtors account or the sales ledger control account. So a debit note received will be credited to sales ledger control account or total debtors control account, and a credit note issued will also be credited. Is this clear? But when we come to the creditors account, the creditors account, it is the purchases ledger control account or the total creditors account. So a debit note issued will be debited to purchases ledger control account, and then a credit note received will also be debited to creditors total creditors control account or purchases ledger control account. So this is what I want you to know. Is that okay? This normally confuses students. I hope you've gotten the concept. So if you haven't subscribed to this channel, kindly subscribe to this channel. We have so many things to learn together. So we meet in our next video. Thank you very much.